joined now by Tim Adams. He's a former Undersecretary of the Treasury for International Affairs in the Bush administration. He's a managing director at the Lindsey Group here in D.C. Tim, always good to see you.
Morning, Peter.
Let me ask you, first of all, what you make of the Obama administration's plan, the president's rollout yesterday, and just as importantly, how this plays abroad.
Sure. Well, I'm glad to see that he's engaged. The budget he put out about 8 weeks ago was a disappointment, so now he has joined the fray, and we can't get a deal without him. Now, unfortunately, it was a very confrontational speech yesterday, as you've heard from the lead-in to this segment, and in some ways it may polarize the debate and make a deal more difficult to get in the short term. I think externally, the rest of the world is just happy we're talking about the deficit, that we're no longer in denial about the extent of the problem.
The IMF, World Bank having the spring meetings here. The IMF kicked things off by saying in its analysis of what's going on in the world, listen, America doesn't have a credible plan for its medium-term and long-term deficit. Does this answer that criticism, what the president rolled out yesterday?
No, not quite. But we've been talking about deficit reduction for years, and it's time that we actually take it seriously, both in the short term and the long term. What's missing from yesterday, and I think is integral to getting a serious deficit reduction, is dealing with entitlements. It's 60% of the budget. It grows twice the rate of GDP, and it will soon cannibalize everything else. Until we deal with entitlements, we can't truly get serious about medium and long-term deficit reduction.
The response from Democrats, the administration, is, listen, we're moving somewhat on the fringes, perhaps, Republicans would say, on entitlements, but Republicans aren't even talking about revenue increases, about taxes.
Right.
That has to be on the table as well. At the end of the day, do you think Republicans are going to have to put those on the table?
I think we're going to need additional revenues. How you get there remains to be seen. I would prefer that we do it through tax reform. You broaden the base, you simplify the code, and you put in place a pro-growth tax strategy. Unfortunately, we're going to have this polarizing debate about the top rate, which is only about $600 or $700 billion over 10 years. And I suspect that will derail a discussion about broader tax reform, which is unfortunate.
You said this might have, to some extent, derailed those talks that are going on in Congress right now. The president's asking for Vice President Biden to lead these discussions. You had the Gang of Six talks. You didn't have a deficit reduction deal when you were in the Bush administration. What do you think the realistic chances are for something this year before presidential election year?
I think in June is near impossible. It's possible that you could get some process reform and maybe some incremental change ahead of the debt ceiling, which is June-July debate. And then we're going to go right into the fall and talk about 2012. So there's 2 more episodes of this standoff in Washington. And I suspect serious entitlement reform is probably not going to happen until 2013.
Let me get some more perspective on America's creditors around the world and the international view on this, particularly as the G20 finance ministers come here. And this is a big focus of discussion even this week. Coincidence, perhaps, the president's talking about it.
Right.
But the debt ceiling vote, how much attention is that really getting abroad? And are we going to start, are we already seeing market impact?
Well, it garners enormous attention. Every time I go to Beijing, there's questions about our fiscal trajectory. China owns $1.1 trillion of the treasuries. We saw just this morning they have $3 trillion worth of reserves. What we do here matters. It matters in Beijing. It matters in Brussels. It matters in capitals around the world. The rest of the world is looking for the U.S. to lead on fiscal austerity and putting all of it, not just the U.S., the industrialized world, putting our fiscal house on a sustainable basis.
IMF, World Bank meetings, the G20. Besides the U.S. budget deficit situation, the sovereign debt crisis in Europe, what dominates this week?
Capital flows. It's mostly small ball, but interesting for policy wonks like myself. Capital flows and when you might put in place capital controls and how that complements macro policies. Reserve accumulation. I mentioned China with $3 trillion. Many countries have reserves well in excess of what they need for liquidity needs in a crisis. How much is too much and under what circumstances? And then we're back at global imbalances. They never seem to go away.
They never seem to go away. And the chances that China is going to play ball with the rest of the G20 in terms of its currency, any progress there?
Moderate change, more of what we see, 4 to 6% nominal with some inflation on top.
All right. Tim Adams, as always, appreciate it.